Kyle Christopher Perry, Bite the Bullet, welcome. Thank you guys for your support, tuning in, keeping me and holding me accountable to getting this thing done. Today we have a very special guest. We're going to be talking about cryptocurrency, Bitcoin, NFTs, FBA by Amazon, a little bit about what I do, what he does. We're going to be shooting the shit. And I think you guys are going to really enjoy it. I have a very special guest to present to you today. His name is Alex Cody Copeland. Welcome. How's it going, man?
What's up? How are you?
I'm doing well. How's your day?
It was good. Thanks for having me.
Yeah, man. Thanks for being here.
It's pretty cool. You got like a whole studio going. It's pretty nice.
I know. It's I appreciate that. I put up these super special sound barriers behind me.
I see that.
So before I finished the room, like if you clapped here, it sounded like the circus. It was wild, but glad you're here, man.
Yeah, me too. This is fun. This is pretty cool.
So for the audience that don't know, you study psychology, you're going to college, you're philosophy, I'm sorry.
It's okay.
Philosophy. I've said that like 8 times before we were sitting in here. Philosophy, you're going to get your master's maybe in London?
Yeah, probably in economics and philosophy as a joint master's, but yeah. Philosophy's definitely been a big focus for a while now. And
you play the piano as well, right?
I guess so, yeah.
You're like the real world, new world Beethoven.
Definitely not. Definitely not that.
But and you do some crypto. You do some cryptocurrency that, from what I hear, what we talk about, that's your full time, which is awesome.
Mm-hmm, pretty much.
You do some real estate.
Mm-hmm.
You should be on the Dos Equis commercial.
I don't know about that. But yeah, no, I've been.
Tell me a little bit more.
Yeah, I mean, like in terms of what I do, I guess. Got like a lot of just kind of different things that I do like day to day. Like my main sort of thing that takes up most of my time is basically just managing like a long-term crypto portfolio that I've been growing since I was like 16 or so. And that's like a market that I've been really, really like interested in since high school. And so I manage that. It's grown to be pretty significant now just because of the direction of that market. And so that's kind of like a full-time job. I like pay myself, like a salary out of returns that I make trading and whatnot. And then on the side, I'm sort of managing like NFT portfolio trading funds.
Awesome.
For groups. I do investment real estate, went through real estate licensing like when I was 18, like right out of high school. Bought my first investment property when I was 19. So I've been managing sort of investment properties since pretty early. Just took a position as like a blockchain advisor on a social media startup that's trying to pivot into smart contracts basically. So I'm helping them kind of make that transition.
How'd you get in touch with him?
It's people that I've worked with in the past that are sort of like starting new projects and whatnot.
Are they in Florida or?
Yeah, pretty much.
Nice.
But yeah, the main thing is definitely very crypto focused. I'm trying to kind of take profit out of crypto at this point, and buy like a operational cash flow positive company that I can kind of expand over the next year, hopefully delegate over the next year, and have that pretty much automated by the time I try to go to grad school, just to kind of diversify cash flow. But those are kind of the main things.
Nice, man. So what'd you have to say, like, obviously since 2016, you've lived through 2 cryptocurrency hype cycles.
Mm-hmm.
From the first one, from Bitcoin going to 1,500 to 20 grand and jumping back down to, what was it?
Bottomed out like probably 3,400, something like that.
Was that, obviously, your main source of income is very volatile.
Mm-hmm.
So how do you deal with that on like a daily basis, other than studying trends? And is it just kind of like one of those things that you've put in the back of your mind that like, that it's going to do that? It's extremely volatile with, margin trading and everybody that's talking about it constantly.
Yeah, sure. Well, like, Margin trading is really just like a small subsect of like how I kind of make money in crypto. The majority of like making money in crypto from my side is a lot less volatile than that. It has to do with like staking rewards, other like passive income streams through like DeFi, decentralized finance protocol yields, and like kind of like more technical stuff, but stuff that is essentially just generating passive cash flow. And like when it comes to the volatility of the overall market, it's something that like on macro timescales is relatively easy to predict, and that's kind of like how I've been able to grow my portfolio to the level that I have in the last like 6 years or so, and have kind of been able to like beat the market overall. It's just because like when you zoom out enough, just the way that Bitcoin's tokenomics work, and like we can get into that if you want, but it's relatively easy to predict when these like hype cycle bubbles are going to happen with like a margin of error of maybe like 3 months in either direction. And it's less easy, but it's still relatively easy to predict when they're going to crash. And so all it really takes is like 1 to 2 cycles of essentially timing local bottoms, local tops, even with like a decent margin of error to basically, 20 to 50x like a portfolio in that market. So I like the volatility. I think it's really good for opportunity.
I feel like it's definitely fun. I've done a little bit of it, and it's pretty crazy to look at your phone and you're like up. You obviously trade at much large scales than I do, but when I trade, and
well, now it wasn't like that like 2 years ago.
But I mean, when I've traded, specifically margin, and I'm like within 30 seconds, I'm up anywhere from $200 to $800. I'm like freaking out.
Yeah.
I'm like, that's a car payment.
Yeah, it definitely desensitizes you to like money overall, which is probably not a good thing. Because it's almost like you just have to treat it more like a game than anything else. It's such a ridiculous market that.
Yeah, I feel like if you're too scared of losing money, you're not going to ever take the appropriate risks.
Yeah. Or
see those potential outcomes that you could see if you are a little bit more risky.
Yeah, it's definitely not good if you're like really risk averse, for sure. But yeah, I kind of got into that early on because basically like in high school, I basically just had like a general investment thesis that I was trying to kind of utilize. We've talked about this before, but basically like my overall goal has always basically just been to focus on education, focus on like being able to dedicate myself to like learning like through my 20s more or less, and so I wanted to be able to like make a significant amount of money like as quickly as I essentially could, so that I didn't have to worry about like work. I could just focus on learning, and so I kind of just like sort of came up with an investment thesis in high school that tried to find like the best like marginal like areas in different markets to where there was the most inefficiency in pricing, because like the only real way that you can ever make money in markets is just by exploiting inefficiencies in pricing, and inefficiencies in pricing, especially like in the modern world, really only happen in areas where there's like a significant degree of like asymmetric information. So like a small subgroup knows the mass majority of like the depth of a given market, and 90% don't know anything.
Don't even pay attention.
Market, right? And so like that's where all the opportunity is. And so when I was like 16 or 17 or so, I felt like the best general area for that investment thesis was just disruptive tech, because disruptive tech typically has like a relatively high barrier to entry.
Which sorry to interrupt you, but which is crazy because it like, so for the audience that doesn't know, we met at Calvary. Shout out Calvary Christian Academy. Yep. We met at Calvary Christian, a private school here in Tampa, Florida. Alex had just moved from Louisiana. What part of Louisiana?
Metairie, like right outside of New Orleans.
Nice. And we started hanging out freshman, sophomore year. And while you are studying asymmetric, information and how that affects markets in a positive and negative way, I'm getting like messed up on the weekends and partying. So I admire that at 16, 17 years old, you're thinking about
some degree of
we were partying for sure, but
I appreciate it.
I was a little bit tuned out from really focused on making money. I always knew I wanted to create something
Mm-hmm.
or start my own business. So I was never like really worried about my future, which is kind of like sounds kind of weird and like naive, but
Mm-hmm.
I just always felt like I was, you know, gonna apply myself some way and be successful.
For sure.
But,
yeah. I mean, it is like a kind of it's probably like too early of an age to kind of figure that shit out anyway.
But no, that's awesome. I mean, you're obviously doing pretty well with crypto and everything that you got going on. So, looks by the age of 30, man, you might be sailing, you know, the Amalfi Coast with some really hot broad, and
I don't know about that. We'll see what happens. Yeah, I mean, it's definitely going well so far, but you know, there's been like a lot of ups and downs for sure. I think basically like just to kind of give, I guess, my background and that timeline. You know, I'd saved up like, I don't know, something like $12,000 to like $14,000 or so by the time I was like 16, probably, and I that's basically how like my like experience in crypto started. Like it took a lot of convincing because like, you know, my mom has like a lot of close friends that are like financial advisors, and they really hated everything that I was trying to do with like my savings. And so I got a lot of shit for like even looking at that market, which kind of turned me off to it initially because like, you know, I'm 16 years old and like, what do I know? These authority figures in like traditional finance definitely seem like they would have a much deeper understanding of the markets, which obviously they do, but like that's the thing about this kind of asymmetric information.
but I think, yeah, which I totally understand, but I also think it's like, I don't know how many people really could have predicted what was going to happen with cryptocurrency. You know, all these investment banks and just our traditional way of finance, they probably don't want to be in this space that they are right now, which is like less control, I would assume. But also it's like they're forced to adapt at this point.
Yeah. Well, that's the thing, right? It's like adaptation is becoming a much like increasingly important, I think, for like success and like the modern age. And it's like for the past couple hundred years, the best indicators of life success, like in psychology, like the highest coefficient for like an indicator of life success is like high IQ and high trait conscientiousness. So like basically just like if you're smart and you have a good work ethic, like that's the best predictor of somebody being successful in like a quasi meritocracy, which makes sense. But I think now, and probably increasingly every year from now, like trait openness is probably going to be it'll probably eventually almost become more important than conscientiousness.
What do you mean by trait openness?
So like in psychology, like the one of the primary systems that they use for mapping personality is called the Big Five personality trait system. Essentially, it's called OCEAN, basically, as like an acronym. Breaks into like openness, conscientiousness, extroversion, agreeableness, and neuroticism. It's kind of like the adapted, like more realistic Myers-Briggs, I guess. But trait openness is kind of like a proxy for creativity. And adaptability and like open-mindedness, stuff like that. And so like I honestly think as we continue as like the derivative of this like rate of growth of technology continues to like grow exponentially, that kind of open-mindedness, adaptability, like willingness and ability to kind of realize trends, to not have biases towards traditional structures, I think that's going to become increasingly important to where eventually it probably becomes more important than like work ethic to some degree, because trends are just expanding so quickly, and so many people have the tendency to stay locked in their traditional standards of what they know,
which can be scary, which is so incredibly scary.
For sure. And so I think
it's like one big habit.
Yeah, and like that's really been my big goal, has always been to just try to be as open-minded to everything as possible, not go into anything with any biases, like very aware from like very early age that like I don't really know anything fundamentally, and so, you know, I'm always just trying to kind of learn, and I just think that's going to become increasingly important. I think that's also why there is so much inefficiency in a lot of these disruptive markets, because a lot of people have this like Luddite sentiment, this like inherent like disapproval of innovation when it's like true disruptive innovation, and they just want to.
That's not going to work.
Right, like just they kind of want to instinctually push against it because it's just kind of like an evolutionary mechanism. And that's why like I focus on disruptive tech so much, because it's an area that is pushing like it's displacing like modern fields that are very common, and so there's going to be a lot of people that are against that, and so it's creating like asymmetry like kind of inherently, just because so many people are always going to be against something that's disrupting their field. And when you have a field like crypto that's disrupting traditional finance, and traditional finance are the market makers and, you know, the price essentially analysts of all markets, then that just kind of seemed like a gold mine. Because here's like a situation where it's very difficult to like consistently beat the market in markets that are dominated by traditional finance. Like you can trade stocks, but like it's very difficult to like consistently just beat index returns and stuff like that, because so many people are doing that every day as their full-time job, and that's what all of Wall Street is essentially consistently trying to exploit, are these inefficiencies in pricing. So when you have a market that is more volatile than the stock market, that's growing at essentially like an exponential rate in terms of like the network growth, it's like tracking like Metcalfe's law, this like consistent law of like network expansion, and traditional finance, like the market makers that in theory would exploit and eliminate those inefficiencies in pricing, aren't even looking at it, like they hate it. That's like very asymmetric
Until it's too late and they're all buying at the,
That's kind of what's
150K.
happening now, right? Like a lot of traditional finance is moving into this space for the first time over the last year, and that's been a really interesting thing to watch, because it's something that people in crypto really didn't think was going to happen for a while. But yeah, so anyway, like that was kind of my investment thesis early on. I didn't just focus on blockchain. I focused on, the EV revolution, just like with all electric vehicles. I focused on like genomics and like, bioengineering, like all of the things that are going on in that space. Focused on, just green energy in general, energy infrastructure, all of the things, like machine learning, AI, like quantum computing, all the things that are basically going to be the most disruptive tech over the next like 40 years or so. But blockchain just really grew much more exponentially than any of those other fields, and so that kind of became my dominant focus.
Nice.
Over the last year.
No, that sounds great. I was I was telling my family, my sister, my mother, my dad, ever since we started talking about crypto, back in like November of last year, you basically just came to me and were like, hey, you got to start buying crypto, man. Like this stuff's just going to, I think we're about to reach this period in time where it's just going to start booming. The altcoins, everything. So I told like all of my family to just start buying crypto, start buying it. And like now I'm to the point, like after our last dip, it's like my mom's like, hey, I think this crypto is going to go back up. And then my sister's like blowing up my phone like, hey, I'm like down, like what should I do? And yeah. I always tell them, I'm like, just honestly buy more. Like I feel like we're to the point that it's not like we're not gonna wake up tomorrow and it's gonna be gone.
Yeah, well, I was really like pushing it on my friends between like
which was great. And
like between like 8K to like 16K Bitcoin.
Yeah,
because like at that point it seemed like,
and if you would have bought it at 8, you would have made like 52 grand if you would have sold it at 60. So in like a year.
Yeah, right. I mean, like, it's all about the timeline. Like, I bought my first, like, Bitcoin around, like, $900. And I bought, like, most of my Ethereum around, like, $90.
So have you made, most of your, crypto wealth from buying stuff extremely early?
Yeah.
Like, what would you say, 90, 95%?
Yeah, all of it, basically. I mean, like, there's, like, a percentage that's been, like, generated on top of that from like leverage trading and like NFT trading and stuff like that, but I do that with like a relatively small percentage of my portfolio. I think like initially I maybe invested like 20 grand or so into crypto back in it over the course of like my entire like kind of high school career, and I went through that 2017 bull run, started buying like Bitcoin between like 900 and like 1200 or so. kind of like rode that up to like 20K, completely missed like the top of that cycle. So like just rode that whole thing back down, which was rough. And I think like by like May of last year, essentially when COVID, I guess March or so, when COVID was really starting to like affect markets, I saw that as like just such a ridiculous opportunity that I think my like crypto portfolio or so at that point was worth like maybe like 60 to 80,000.
And what'd you turn it into?
Uh, at the peak, like around like 1.7 million
In a year.
In a year, yeah. But I also like, so what I did like around March of last year was like I saw that COVID dip as like a really good opportunity. Like price was suppressed below like most of the common metrics for like fair valuation in crypto, which like do exist and are relatively predictable. And again, like the macro cycles are predictable, and we can get into like the fundamentals of why that is, and it has to do with like Bitcoin's incoming reward rate and all of that kind of slightly more technical stuff. But I had that investment property that I had bought when I was like 19 or so, and just because of residential real estate in Tampa expanding so quickly, like my equity in that property had essentially doubled by March of last year. And so I went for a cash out refinance on that property, basically just to get more liquidity to put into crypto during that like really significant dump. And so I managed to like basically pull like another like 80K or so out of that investment property. You know, I bought that investment property with like I think like 16,000 down or so, 18,000 down.
And for those of you that do not know, the audience, a cash out refinance is you've been making payments on your house for an extended period of time. Did you get it reappraised? You get it reappraised. It's at now a higher value. You can take XYZ out of the house. Your rates go up a little bit. $100. What you get up? $150 a month. $100 a month.
I think my rates actually went down because
your rates went down and you got 80K.
Interest rates had dropped significantly, and I when I bought that thing I was 19, so like they screwed me on rates anyway.
Yeah.
And
you probably had not so great credit, but basically you get money out of your house that it's already, appreciated. Your rate could go, in his case, down, which is crazy. Most of the time it goes up just a little bit, just a hair. And then that's how I actually, like a lot of people, just go and buy another place.
Mm-hmm. Yeah, I mean, initially what I wanted to do was take out a home equity line of credit on that property, which is like one of my favorite forms of debt. I think it's like a really, really cool loophole in investment real estate that a lot of people don't really talk about. And we can talk about that if you want, but like, I don't know. But at the time, like rates had dropped because, like everybody was freaking out and Trump was trying to like get the Fed to like push down rates as much as possible. And we went like near zero almost immediately.
What a great guy.
I don't think that was a good move economically, but whatever. Anyway.
Hey, it was good for the people though. It was good for the people.
It's just like that's the one bullet that the Fed has basically, and we shot it immediately. It was like immediately. But anyway, so rates had dropped, so everybody was trying to refinance, everybody was trying to get HELOCs, everybody was trying to, reevaluate their loans. So I couldn't get a home equity line of credit on a reasonable time frame. And like the way I saw it, it was like this opportunity in crypto wasn't going to last more than like a month or so at these like prices. Like Ethereum was $90 in March of last year.
Dude, I still didn't I never got that phone call that was like, "Hey Kyle, I'm gonna kill you if you don't buy this at $90."
Well, to be fair,
I'm just
right?
kidding.
Like,
Honestly, you probably didn't even know. Like,
yeah, I was making like a kind of like a relatively risky move in terms of like proportional to.
And
like,
that was at like 1,200, wasn't it? It hit like 1,200 and then shot down to 90.
Ethereum?
Yeah. Or did it hit?
Yeah, I mean Ethereum topped out in the last cycle at 1,400.
Yeah, and then just like $90. Like that's insane. That's like what 99% drop.
It's significant, yeah. But like I really believe in like smart contract network growth. I believe in like the goal of like a decentralized global internet. I think that like what smart contract platforms are aiming to do is going to revolutionize the economics of the internet. It already has in a lot of ways. And so like I don't really have any doubt that like Ethereum was probably one of the best investments of the next decade or so. But it's still like, it was still a risky move. Like,
yeah,
it was
for sure.
Definitely a kind of more bold thing to do. But basically like doing that allowed me to like decrease my rate on my property, and it allowed me to double the value of my portfolio. So I put that in. I bought, like 100 or so Ethereum at like $90. Maybe more than that. I bought like a lot more of kind of undervalued stuff that I really liked, and that was really the big catalyst for being able to like 15x my portfolio over the next like 11 months after that. Was having that like extra liquidity or so.
Nice.
Yeah.
No, that's awesome. My father has one of his old work acquaintances, if that's even the right two words to throw together. Her brother had bought Bitcoin, like, I want to say in the couple $100 range, $300 to $500, sub $1,000, like a lot of it. And he bought a lot of Ethereum, and he won't even tell his family how much money he has, but basically he doesn't work anymore, and he's got like millions and millions of dollars.
Yeah.
But he told my father, and told his sister, like, honestly, don't worry about Bitcoin. Like, if you want to buy it, but I would just buy as much Ethereum as you can. So it kind of amazes me how much I feel like Bitcoin has had this, like, everyone, for those that have like bought illegal substances from the dark market, they kind of have that in their mind that this like Bitcoin is like some sort of like weird fake thing, and it doesn't have any value to it. But it definitely does, and it's amazing how many people our age still don't buy it, still don't know what it's about, still don't like anything. And it's like, this is like what's happening in our day and age. Like, this is the future, and there's so many people that are our age that have no idea what this technology is, and it kind of blows my mind.
Yeah, for sure. And that's like the big opportunity, I think, is just the asymmetry of information. It's pretty wild.
I hope you guys are enjoying the Bite the Bullet podcast. As you can see, the man that we have in here today, very knowledgeable, brilliant. Take some notes, but I've got to do this 30-second sponsorship video. We are sponsored by Bang Energy. This is the Blue Raz. Blue Raz is real good. I'm gonna try it right now. We're gonna crack her open, see what she's talking about. Don't shake it. Just bake it. Super creatine, ultra CoQ10, EAA aminos. Crank one of these bad boys out, drink it, slurp it down before you go to the gym. Knock out some weights, but let me tell you something. This is also really good if you're having some, my guys out there, if you're having a little bit of ED and your wife's complaining, your girlfriend's complaining, drink a Bang Energy. No, we're not sponsored by Bang, but here's a bang for you.
Is that actually a thing?
What?
Like, does that help?
No, I made that up. Yeah, I just think it's crazy that so many kids our age are so ignorant to Bitcoin and Ethereum and just cryptocurrency in general.
Yeah,
It honestly amazes me.
I think like the problem is that most people don't know what it is, and so like people think people have these like widely, just generally wrong opinions about how it works fundamentally, what it is. They they think they're all like the same thing. They think that they're like stocks basically, or they think that they're like shares in companies. And it's nothing like that.
I actually kind of explain it to people like that because it's like easier for people to understand. It's like,
yeah,
because honestly, like a lot of the cryptocurrencies and coins and tokens, they do have a purpose. They have
utility. Yeah,
they have utility, and the grand scheme of things, it's almost like a company, I would say.
Yeah. Depends on which like category you're talking about. Like, this is another big like wide scale issue, is that like I think a lot of people think that they're all basically the same thing, and like it's just not the case at all. And we can get into like some of the technicals if you want, but
yeah. So like some of them are, some cryptocurrencies are valued like as Bitcoin and Ethereum, and some of the larger ones, those are some that you would send to other people for a way to pay, right? And then you've got
so like basically Bitcoin came out as the first iteration of blockchain tech, and it's the simplest like manifestation of that technology, which like that technology essentially is just a ledger of transactional data grouped into blocks of data and chained chronologically, in an order that makes it tamper evident, so very difficult to like hack or manipulate. Um, the big solution that creates for our day, and the reason why this stuff is so valuable, is essentially that um, like the internet was built on this sort of framework for communication, this framework for data, and it had nothing to do with value. And that's because like the internet has been built in this sort of like consistent evolutionary process of just adding things when they're needed, basically. And at the very beginning, the internet was just this like ARPANET structure, and that was just used as like ways for professors to like talk to each other about their research through like a forum model, basically. Very simple. Like it was just like the goal was just to make communication more streamlined, like to sort of grow on like what phone lines had done, and sort of
When something looks for, they don't have to walk to the library. They're
Right.
not going to rent a book.
Exactly.
It's right there.
that was basically one of the primary use cases of the internet. As that grew, no one knew what it was going to grow into, and it wound up growing into like a very ubiquitous structure and like a very ubiquitous like medium for culture. And so like now what has become increasingly obvious over the past decade is that really what's happening is we are transitioning, we're basically like manifesting our entire intrapsychic culture onto the medium, onto like a digital medium, because it just makes things easier, makes things more streamlined. It's a lot more accessible.
And anyone can almost do it if they have a phone.
Mm-hmm. Yeah. And so as that started to be the new use case of the internet, this sort of like widespread, very, very necessary part of our daily lives, it lacked a very like crucial element for that purpose, which was the ability to tokenize and transfer value. That was something that the previous internet just can't do, because when you think about it, like fundamentally, if the internet is based entirely on communication networks, and so it's just built on code, there's no real way to tokenize value if you're just using code, because the code would just be copyable. You run into this like double spend problem, which just basically means like, like a good way to, I think, understand it is like the reason why like no digital artists, no like musicians, anyone in that kind of medium has been able to like make a lot of money over the past like decade is because people can just like copy their stuff.
Yeah, LimeWire, man.
Yeah.
2008, Lil Wayne, Lil Gucci Mane.
There you go.
You ever use LimeWire to download songs?
I probably did at some point, yeah.
Dude, it was like $1. What didn't iTunes start at like 99 cents or $1.99 to buy a song?
Yeah. I mean, like I
I
had
was like, why the fuck would I buy a song if I can just copy it?
I know. I always had an Android phone, and like you could just download these like sketchy Android apps and like
Yeah, just like download the audio file.
Mm-hmm.
Funny fact, that's how Soulja Boy got famous.
How so?
So he started putting out his own music, but titling it on LimeWire as the other songs that the artists of that time were blowing up on.
Yeah.
And everyone was downloading. They thought they were getting some 50 Cent. They thought they were getting some Beyonce. They thought they were getting
funny.
some Eminem. And then it was just like Soulja Boy cranking it.
Yeah.
And he like blew up, and he signed a record deal. And now it's Stacks on Deck, Money Gang. Shout out my boy Soulja.
Fair enough.
A little bit of history for you.
There you go. Okay, so like this is I think an easy way to understand like some complex like ideas in cryptography. So this is cool. Like we're building it up like from the basics. So it's like that's clearly a problem, right? It's like, how are you going to be a digital artist? How are you going to be a musician? How are you going to be trying to put out like film if people can just copy all your files and not pay you for them? And that made all of these people in those categories just resort to third-party labels to basically copyright all their stuff to try to force people to pay money for it somehow. And
then it actually ended up not being like theirs. They kind of got
Right.
screwed out of deals and stuff.
Exactly. In the same way that that's the case with musicians and that was the case with artists, it was also the case with digital money, right? So like there's no way to have personal digital money as we transition into this digital age. And we're clearly on a trajectory of moving towards a cashless society. It's not even really a question. I mean, like, a lot of the Nordic countries, like Northern Europe, like, it's already illegal to basically buy anything and with like over, I think, like 900 euros.
It's illegal
in cash.
I've never heard of that.
Do it. Yeah.
Are you serious?
Yeah, because they're phasing out big cash purchases.
So what, you just try to you bring out a sum of cash and you just go to jail for having too much cash, or you just get fined?
You get fined, yeah.
Oh my God.
And like the companies aren't allowed to like accept it because like you think about from the government standpoint, and this kind of sucks, right? Because there's pros and cons to every kind of like innovative paradigm shifting technology. The pro to like blockchain is, on the one hand, it allows tokenized value on the internet, which didn't previously have the infrastructure to hold and maintain tokenized value. On the downside, everything becomes significantly more transparent, and so it gives governments much more ability for surveillance, basically, of purchases. Everything's transparent. They can see everything you're buying. If they want to utilize blockchain in the way that like China's utilizing blockchain, they can implement like social credit systems. They can just ban you from being able to buy anything. This is the whole, like, there's this entire like monetary war going on right now with like this like sort of libertarian cult of blockchain advocates. But the technology,
the Bitcoin or die group.
Well, that's kind of who those people are, yeah. But then, like, on the other side, there's, like, government utility of this technology for the complete opposite, like the polar opposite of that. And that's something that you're going to get with any kind of paradigm-shifting technology. There's going to be a spectrum of use cases. And in this case, it's really clear how opposite these use cases can be. That's why China was basically the first world country to really roll out a digital central bank digital currency. They were on that very early, before the U.S. really even thought about it. And they rolled that out because, obviously, from China's perspective, it makes surveillance 1,000 times easier. Cash is, like, way too private from their perspective. Can't see what people do with it. You don't know exactly what they're buying it. People might not file their taxes. Like, there's all of these loopholes that people can use if they're in a cash-based society. And so the governments don't like the custody aspect of blockchain, which we can talk about because that's the other side of this. But they do like the surveillance capacity of blockchain and the idea of a transparent central bank digital currency.
More control,
right? And in China's case, right, it gives them a significantly more power over their population. Like, what China's moving towards basically is this sort of which is kind of like a diverted topic, but like this social credit system where if somebody kind of goes against the state, they can just freeze all their funds, right? They can make sure they can't get loans. They can just block them from society, right? Very like Black Mirror style. And they can only do that on the top of blockchain technology. On the other side, though, without blockchain technology, as we move into this cashless society, there's physically no way to hold custody over your own wealth. And so it's a very interesting, like, polar spectrum of freedom and limitation with the same technology. And what I mean by, like, holding custody over your own wealth is basically, we've talked about this before, but essentially, as you move into a cashless society that isn't based on blockchain tech, or even one that is but isn't based on decentralized currencies, what you end up with is you have to rely on third-party trust intermediaries in order to validate your transactions. And so, like, what that means practically is when you remove cash from society, there's no way to have that kind of... So you could think of custody over your wealth as, like, the ability to, like, take cash and...
out of an ATM.
Yeah, like, to, like, put it under your mattress or something,
okay.
Right? Like, you actually...
Take it out of an ATM and then put it under your mattress.
Like, you have that cash yourself, right? You can do that with a lot of archaic forms of money. You can't do that with any digital forms of money before blockchain, right? And so most people aren't using blockchain practically, right? And so those people are living in a society where they have no custody over their wealth in the digital age. And so any money that you have digitally is held by some sort of third party, either a bank in your checking account or a proxy to a bank like a Venmo or a Cash App, which basically came in to do what crypto does, but with a better UI, quicker, but without blockchain as its foundation. So people can't withdraw their stuff. So it still doesn't fix this custody issue. And so from a purely practical standpoint, it really doesn't matter that much day to day. But from a philosophical standpoint, it matters a lot because, you want to be able to have custody over your wealth. It doesn't matter as much when you're living in a first world developed country, but when you're living in a third world country, or you're living in a still developing country in any other capacity that's subject to corruption, manipulation, central bank corruption, hyperinflation, any of these things like
Which
war.
I think that's like the coolest thing about blockchain technology.
Mm-hmm. Yeah.
It's going to change a lot of the lives that need to be changed in the right way and
Right.
give a lot of opportunity for those to those people.
Exactly. And so like one of the coolest things for those people, right, is like basically the very, very cool idea that Bitcoin started with and that a lot of other stuff has run with since is like, let's democratize like central banking to some degree, right? Let's democratize the monetary network of a given country, because previously the central bank, the government, they have a monopoly over the monetary network of that state. It's like they are the end-all be-all decision maker of interest rates, of inflation rates, of basically every macroeconomic catalyst for the growth or death of that country's native currency. And the people really have no say. Like central bank is seen as such a macroeconomic, like high level thing that the public really has they don't even really keep up with what's going on typically at that level. And so if somebody's living under a corrupt government where the central bank is subject to manipulation, or there's a lot of like racketeering, there's a lot of like think about like the way Russia does things in terms of like their big business style with just like crony capitalism, it can be very difficult for them to have the ability to do anything about corruption at that high of a level. What Bitcoin did initially was it gave the people a choice for the denomination of their wealth, basically. And so if a country started to just hyperinflate its currency due to corruption or just general ignorance, like the people for the first time in history could like flee that currency digitally, if the UI is, easy enough to do that in like a relatively seamless way. And that's a very innovative idea and really important for freedom. And that's why like the roots of this stuff is so libertarian. It's because the initial goal from like Satoshi Nakamoto, like this sort of anonymous founder of Bitcoin, was to give people some sort of power over the central banks, even if it just meant freedom of choice.
Which is what we should have from the beginning.
Right.
Since we've elected these certain officials to be in the position to create such things.
Right. And so at a very basic level, the way that tech operates is Bitcoin and anything that is in the same category of Bitcoin, which really isn't that many cryptocurrencies. There's only like a handful of cryptocurrencies that are really aiming to do the same thing that Bitcoin does, which is just essentially a proxy for gold, almost like a alternative store of value. That's really it. Bitcoin, like people aren't really building decentralized applications or decentralized autonomous organizations on top of Bitcoin. It's not really like a smart contract network. It really is the first mover in this technology. And it's also the most basic manifestation of this technology, because like when you break down what blockchain is, it is literally a chain of blocks of transactional data. And when you think about what money is in the most abstract form, money is just a ledger of transactions, and it's matched with some form of validation that the people making those transactions within that ledger of data actually had the funds and actually transferred the funds. And the problem was initially in the digital age, there was no way to do that without this third-party trust intermediary. And so we had to rely on banks, we had to rely on proxies of banks, we had to rely on our work, whatever, in order to validate the monetary transactions that are happening within any monetary network, even with like the US dollar in a digital medium. The brilliance of like Bitcoin was decentralizing that validation network. So basically, and I don't know how technical we want to get, but like basically the way that functions is in like a 30-second pitch or whatever, is all of the blocks within that blockchain are linked chronologically because they have essentially the fingerprint or the hash or the nonce of like, they have the hash of the previous block on each new block. And in order to mine a new block, right, basically you have to use computational energy to crack a code of the nonce, or like the, like you can think of it as like almost like an ID of like this new block within the blockchain. The only way to do that is to exert computational energy. And that's important for consensus because it essentially validates the inability of people to manipulate and corrupt that network. And then the brilliance of Bitcoin initially was decentralizing that consensus mechanism. So the blockchain can be downloaded by anyone with a internet connection. And like at the beginning, just like a CPU, they could mine Bitcoin, and they could be their own validator node, run their own validator node for that consensus network. And so it made it basically immutable or like unhackable.
And it's not just based on one party. You've got multiple parties that are all agreeing or forced to agree on one thing.
Yeah.
And
that's
making sure that, these transactions are
valid,
correct and valid,
yeah,
rather than one group at a bank or one person at a bank saying,
mm-hmm.
oh yeah.
Yeah, you're decentralizing the validation or the trust intermediary. And eliminating that trust intermediary eliminates like you're saying, the idea of centralized power, and so the potential for centralized corruption within a monetary network, which is a very innovative and sort of revolutionary idea. And it's built on top of a lot of cryptography. It's built out of like these very innovative revolutions in that technology and that medium, things like cryptographic hash functions and like Merkle trees and like very technical stuff. But in practice, all it means is that we no longer need a third-party trust intermediary. And from a monetary network, that just means you can have money that isn't controlled or manipulated by a single entity. But you can realize that the elimination of a third-party trust intermediary has effects over all sorts of categories, including like what we were talking about a minute ago, music industry, art industry, right? Musicians now could launch music which they're doing right now. But this is pretty like cutting edge stuff just because of NFT technology. But musicians could like launch music without the need of a label, right? Because their music is now
they already have credibility.
Yeah, and it doesn't succumb
to the popular ones.
Yeah, but it doesn't succumb to the same copyable issue that like the previous internet had, because they could literally own the physical like music audio file, for example, and that's a tradable asset now because now we can tokenize assets on the internet. It has effects in things like real estate, land titles, right? Land titles can be transparent, which is a big problem in the developing world, making sure that land titles, supply chains, and things like that are always equivalent. Supply chains across other mediums, just like any given supply chain can now be, you could track it back to its inception. You can make sure that, there's no manipulation on the supply chain. The second major innovation after Bitcoin was the introduction of smart contracts, which is what Ethereum basically did. And a very easy, practical way to think about that is to almost think about it as like a decentralized escrow account or something. So it's like, for example, in real estate, right? It's like if you're buying a house or something, you're going to put money down or whatever into an escrow account so that you can't touch it and the seller can't touch it. And until the terms on the contract that you've agreed on are finalized and made sure that they're accurate and valid, then the money opens up to the seller. But in order to do that in the modern age, or previously, we needed like the same thing that is really the core of this entire idea, which is this third-party trust intermediary to make sure that everything's valid. And so escrow accounts only operate within like the confines of like a bank or like a banking network, and the bank acts as that trust authority, basically. But now with like the introduction of Ethereum, the introduction of smart contract networks, we can make things like escrow accounts, which are basically what smart contracts are, without the need of anyone. A buyer and a seller could enter into a smart contract. The blockchain itself acts as the trust intermediary. And there's no potential for corruption because it's literally just written out in code. When the terms of the contract open up, the money opens up, and you can think about the literally infinite ways that kind of technology is revolutionary and paradigm shifting for the existing economy.
Yeah, and I think specifically voting.
Yeah, voting's another really great use case.
would be fantastic. And actually, I know a very I wouldn't say well known. I know a fantastic company. I'll shill it to you. I don't know if you ever heard of it or not, but Dragon Chain. Dragon Chain. I've been telling everybody. Well, not everybody, but close people.
Kyle's
Dragon Chain.
Real big on Dragon Chain.
I'm real big on Dragon Chain. It's a hybrid blockchain coming from the USA, okay? And it's a great company. They have like 10 use cases. Their biggest thing is going to be voting. One of, I think, personally, going to be the largest. If you want to buy some Dragon Chain, download KuCoin.
God.
Download KuCoin. It's a Chinese. You're not really supposed to use KuCoin over here, are you?
KuCoin's good, yeah.
But
I use it all the time.
download KuCoin, K-U coin. Buy some Dragon Chain. It's like 12 cents right now. Okay. Buy everything. Sink your entire wealth in Dragon Chain.
Don't say things like that.
Go under the bridge, roll out a cot, put some cardboard over your head, and wait until this thing fucking blows up because you're gonna be worth a lot of money. Okay. But I actually think it is a great company. You should, I try to tag you and send you stuff, but no one really listens.
I own Dragon Chain for a bit. I've looked into it. That's cool.
But they got some good stuff. But I actually think I think their target is gonna be as far, if they do succeed in the method and ways that I think they will. I think the voting aspect will probably touch cities and towns, probably towns more than Dragon Chain reshaping the entire infrastructure for the voting system of the United States.
Yeah, well, it's crazy that the way we handle voting is as archaic as it still is. It really is. When we have technology that,
like, why do I have to go stand in line and smell some fucking fat ass that stinks and it's been sweaty? Sorry, but no, like I don't want to. You know what I mean? We have to go out. We have to break our daily.
Well, not even that.
Routine.
The way we calculate votes. It's like we're living in literally like it's a century-old mechanism for voting.
It is.
That is absolutely.
And then, by the way, who owns the voting machines? Who supply the voting machines?
Let's not.
So there's a lot. My point is
I know.
And what we're talking about here for the past 45 minutes is there's so many ways for specifically that system.
Mm-hmm.
Over the course until the voting is complete, there's 10 different ways on how things could be manipulated.
Yeah.
And to your point, I think blockchain is gonna solve a lot of those.
Yeah, blockchain will eliminate a ton of the inconsistencies that we currently have with our voting structures. That's like inevitable. That should have already happened, honestly, but just the bureaucratic systems are just like very slow to innovation in a democratic state like this. And so that's a really obvious use case. Things like digital media, art, movies, any kind of digital media, that's another obvious use case. Things like finance, right? That's what basically happened last summer that kind of kicked off this last hype cycle. It's like we started using smart contracts to decentralize finance mechanisms. And so...
And you actually got a loan for you acquired a loan for your new place, right?
Yeah, I used decentralized protocols literally when I took...
Did you get it same day?
Yeah, it was instant, right?
Like right to your account?
Yeah, completely anonymous.
Did it hit your bank account or did it hit like a...
Yeah, it hit my bank account.
Okay.
Completely anonymous, right?
What did your bank say?
No need for social security numbers.
Do they say anything?
They're a little concerned probably, but it's okay.
I mean, are they legal? Are they legally allowed to like look into that?
Yeah, they can ask you if they're concerned.
Do they ask anything?
I might have gotten a couple questions, but it's fine. But yeah, it's like, like when you really start to think about what that technology means in practice, you realize just how many things are going to be disrupted by it. Traditional finance is a really good example. Like I could go on to decentralized finance protocols built on top of some smart contract network like Ethereum, for example, and I could do a dozen different things that would traditionally be much more difficult in finance, and the barrier to entry is essentially negligent, right? So it's like, or negligible. So it's like, I could use a decentralized exchange instead of using a centralized exchange like Coinbase or something like that. Or if we're thinking about like stocks, like a centralized brokerage or something like that. Like in order to like really trade stocks or options or something like that, I have to go through so many levels of validation with something like TD, Ameritrade or something. And it really lowers the barrier to entry for a lot of people.
Yeah, because you can't even day trade unless you have 25 grand.
Right. There's a lot of
Like, there's
limitations that are
so many
unnecessary.
limitations.
And so with something like decentralized finance, basically what you end up having is I can go onto a decentralized exchange on Ethereum. My like hot wallet of like, a MetaMask plugin or something like that will sync instantly. All my funds are immediately there in a secure way. They don't know anything right about me except for basically my public domain, which is my public key. It's the way digital signatures work on blockchain. There's just a public key, private key pair. And that's what enables a lot of these early blockchain innovations.
There's no credit bullshit check.
Yeah, there's nothing, right? Because a lot of this stuff's collateralized on a relatively high LTV, which is, maybe a limitation, but it also makes the loan process much more secure, which means if you're the liquidity provider for a lot of these loans, your rates are much more secure, your risk is much lower, and because of the early stages, your rates are much higher, right? So, like, for example, the way I really catalyzed like a lot of the initial growth in my crypto portfolio last year was I was like one of the first sort of like early liquidity providers on the first like major decentralized exchange on Ethereum, which is called Uniswap.
So just pretty much just peer-to-peer lending.
Yeah, well, it's peer-to-peer exchanges, right? You think about like what like Coinbase does, for example. It's just like in order to have an exchange of multiple currencies or in the stock market or something like that, but specifically with crypto, it's like you need a ton of liquidity for all of these pairs. And so what sort of like the brilliant people that built out a lot of this DeFi infrastructure did is they just created a platform where, all of the liquidity is provided by users of the platform. And instead of all of the fees going to like some centralized company, they just go proportionally to the people that are providing liquidity to the other users. And so like if I have a lot of Ethereum or something and then I have a lot of other coins, I can provide liquidity for all of those pairs. And you're subject to like things like impermanent loss, which are kind of technical, but you're making money passively by just building out the infrastructure of these platforms. A lot of these like decentralized finance protocols opened up a ton of opportunity for early investors, and that's like really always been the point of like kind of my investment thesis is to be at the cutting edge of innovation and to get these like very asymmetric opportunities. And so like I made a lot of the money that kind of initially sparked the growth in my crypto portfolio outside of just market growth from being like an early adopter of a lot of these decentralized finance protocols. And so literally by being just like a liquidity provider on Uniswap or staking currencies that use like proof of stake validation networks or yield farming, which was a massive opportunity early on in the DeFi growth space. You're making ridiculous APR. Like literally you're probably making like, at least for the first few months, thousands of percent annual yield just by yield farming, which is crazy. Obviously that doesn't last forever. It's because the liquidity is so low at the beginning. But the entire decentralized finance space, I watched it grow from when I first like started.
Yeah, what's the evaluation of worth on that?
Yeah, that's a good question.
That's got to be $1 billion.
Oh, it's way
Several
more
hundred
than that.
billion, right?
Yeah, well, like I watched like the base like the total market cap of decentralized finance liquidity that was locked up basically run from, it's at 90 billion right now. When I first got into it, I think total liquidity locked, which basically just means money that people have locked into a lot of.
And how long do you keep it in?
However long you want. Most of it doesn't have lockup periods.
Oh, okay.
It's incredibly versatile and flexible.
I did that on Bybit a month ago.
Mm-hmm.
And it said 15 to 17% annual yield, and like for whatever reason my mind was like, oh, I'm gonna make 15% in like a week.
Yeah.
So I put like I didn't put much. I put like less than $1,000 in it.
Mm-hmm.
Dude, I made fucking 15 cents.
Bybit isn't.
And my
DeFi,
money was held
so like,
for a week.
I wonder what Bybit's even talking about.
Yeah, but it was just cash, USDT.
Gotcha. Yeah, just kind of like probably staking.
But,
yeah, like literally.
They have groups though on Bybit that you can get invited to cloud mine.
Okay.
That like the annual yield is like 400%,
mm-hmm.
which is like you got to get like a special invite code or something like that from the creators.
Yeah, Bybit can get kind of sketchy sometimes, but yeah, like when I first got into DeFi, the total value locked was I think 400 million, and literally by the peak when Bitcoin was about 65K, I think total value locked in DeFi was around 90 to 100 billion, right? So like I
That's
watched
insane.
like an entire market grow from 400 million to almost 100 billion in like 10 months. And like that's the kind of idea of like the potential for ridiculously outpaced returns, because think about that multiple in 10 months of an entire industry, right? Not even just like specific coin or group. Like if you were in DeFi at all, like you're dealing with these kinds of returns, and a lot of it's even more concentrated if you're in the right things in DeFi. And so like just to like kind of like close the idea of decentralized finance, it's not just things like decentralized exchanges, which are obviously an incredible innovation. The idea that you can go and trade assets where no one is centralized, all of the liquidity is provided by the user base, you can see the back end of the platform, everything is transparent. That's awesome. But there's a lot more technical stuff. Like we were talking about loans earlier, right? Like I can literally do peer-to-peer loans with no background check, right? With no credit check. There's a decent amount of collateralization, so there's very little risk for the loan provider. Like these are innovations that are incredibly useful, that are disrupting the entire banking industry, because the big thing that the banking industry had was the necessity for this third-party trust intermediary, and so they've had this monopoly on their utility. And now it's like not only is that gone, but virtually every other financial instrument that they provide is no longer. You no longer need to deal with the banks, not like just bullshit.
And I
like, okay, here's a question for you, because as you know, like, I try to like consistently try to take profit out of crypto when things are going really well, because the entire crypto market works on a series of consistently inflated bubbles, basically like euphoric bubbles that are catalyzed by a couple things that we probably should mention, I guess, because that's probably like one of the biggest pieces of misinformation that people have, which is that last point about like technical side of like crypto, and then I'll move on. But like, I mentioned this to you like a couple weeks ago, but basically like people seem to think that the crypto markets are inherently like arbitrarily volatile. Basically, like it's complete volatility. There's no underlying system to that volatility. And so there's no way to kind of exploit that volatility. That's why traditional finance has been against it for so long. It's like they see it as tulips, like the modern tulip sort of bubble, and they think that it's completely arbitrary. So it's like if you make any money in crypto, and I've seen this with financial advisors that like I've put in charge of like money that I've taken out of crypto for the stock market. Like I've got financial advisors in traditional investments now, and they hate crypto, right? Even though the money I'm giving them is from crypto, like they hate it. And every time I tell them, like, if I've made money in crypto, they just say, like, congrats, like, you very luckily, like, exploited a bubble. As if, like, you won the lottery, ignorance, basically, right? But, so, like, they see it as completely random.
How old are your advisors?
I don't, like, 50s plus, probably.
They suck. Just kidding. They're probably great people, but...
He's a nice guy. But, yeah, no. So, like, basically, the point of that is just, like... You know, like Forbes did an article maybe almost a year ago, and like in college I was a double major in economics and philosophy, and my like capstone class for economics my senior year, my professor was like this like brilliant guy, and really like hit it off with him, and one of my favorite professors that I've had, and we would debate about crypto all the time because he hated it, and he would always like start the classes of this like seminar class with, you know, just articles. We'd have to read like a ton of articles all the time, and he'd throw in crypto articles a lot because like, you know, he wanted us to be up to date and like understand, and I would just debate him in class about blockchain all the time. But one of the articles that he showed us was Forbes trying to figure out how long-term Bitcoin investors were timing the market so perfectly, because they couldn't figure that out, because again they just haven't, I think, looked into the fundamentals of how blockchain works. And so we still have this constant sort of core idea of like misinformation or like high barrier to entry of like information, learning, whatever, knowledge. And so the article basically said like, you know, it was explaining how crypto's gone through consistent bubbles, like repeated like euphoric bubbles, and how somehow people that because you can see all this stuff on chain, like people that are long-term holders, you can see that on chain. It's not hard. And somehow, from their perspective, the people that had been in the markets for a decent amount of time were timing the local tops and the local bottoms of each apparently random like bubble with a margin of error of like a few weeks, and they were exploiting these bubble cycles. And like the conclusion of the article was basically like, maybe the most impressive thing about Bitcoin is somehow the ability of its long-term investors to exploit these cycle trends. And they couldn't figure out why, so it just ended like, we have no idea. And the answer is like really obvious, and it's something that I think is like one of the biggest pieces of misinformation, is that like crypto is relatively predictable on long-term cycles, because at least up until now, and this will probably change over the next decade because things like Ethereum will probably eventually overtake Bitcoin in terms of market cap dominance, just because they're providing more utility. But up until now, the entire market has been dictated by Bitcoin's tokenomics, and its tokenomics, just by the way that blockchain functions, work on consistently disinflationary protocols. And so like basically like the way to say that in like the least technical way possible would be that the incentive for miners on Bitcoin's validation consensus network are block rewards. And so like if you successfully mine a block, each block that gets mined,
I think we just got more technical.
well, I know, but I'll
I'm kidding. You're good, man. You're good.
no, I'll like simplify it.
No,
But,
you're good.
The reason that these miners are even mining Bitcoin is because they're making money, right? So it's like, well, how are they making money mining? What is mining? How does that even work? They're not like out there like mining ore. So like, what does it mean? Basically what it means is like they're using their computational energy to solve very difficult, like random mathematical problems. They're trying to guess a number on the next block, and because of the way cryptographic hash functions work, there's no reasonable way that they can guess it with the small amount of input that they're given. They can't guess the output, and they certainly can't reverse engineer the output to the input. And so basically all that means is that every block in Bitcoin's blockchain that is newly minted pays out miners a reward in new Bitcoin. And every 4 years, or every 210,000 blocks on the blockchain, that reward rate gets cut in half, right? So at the very beginning, when like Satoshi first minted it, first created this blockchain, he was the only one mining it. Every Bitcoin block basically gets mined successfully every 10 minutes. It's like a self-adjusting algorithm to make sure that depending on the hash rate, it can consistently keep that block rate at 10 minutes. And so basically it started out at 50 Bitcoins per block. So 50 new Bitcoins were introduced into the network every 10 minutes. 4 years after that, cut down to 25, 12, like now it's like 6.25. And so the way these hype cycles work, which I think is like an important thing for people to at least realize, is Bitcoin goes in these 4-cycle bull bear market like structure because, at least in a big part, its incoming liquidity is cut in half every 4 years. And so just from basic supply demand, if demand in crypto is constant even, let alone if it's increasing, and incoming liquidity gets cut in half, and you have a relatively illiquid asset because a decent percentage of the Bitcoin monetary network is held offline in cold wallets, and so people that aren't even introducing that liquidity into exchanges.
It's even less.
Yeah, so you already have a relatively illiquid asset, and so it's a lot of the pricing is based even more so. Like there's even higher weight put on incoming liquidity by these every 10-minute block rewards and these miners introducing liquidity into the network. And so basically
consistently more demand and less supply.
Yeah. And so like because Bitcoin and the way blockchain works, you can look at all of the on-chain data. You know exactly when the halving reward rates are going to happen for every currency that you want to deal with. You know the amount of liquidity on exchanges, you know the amount of liquidity held in long-term storage. It's very easy to predict that market because of this kind of transparency of the back end, which is something that I think a lot of people don't either know about or realize or look into. I don't know. But it makes it much easier to time on long time scales than like the stock market. And so every 4 years, the incoming liquidity gets cut in half. It dries up the liquidity on exchanges to a decent degree. And just from basic supply and demand, that is always going to increase price unless demand is falling at a equivalent rate to the minimizing like incoming liquidity. And so you can basically, if you just want to be like a macro investor for blockchain, or let's say you just want to focus on Bitcoin, you could have for the past like 10 years, and this is basically what I've been doing since high school, just time these 4-year cycles based on the liquidity halvings. And so like May of 2020 basically was the last blockchain reward halving. And about 2 months after that, we started like the parabolic run. That's how it always goes. Usually in the months leading up to the halving, everyone in the blockchain community knows that that's coming. And so they're getting increasingly excited. That's increasing demand. Because of their increasing excitement, they're usually innovating some sort of disruptive niche. That was DeFi in 2016, or that was ICOs in 2016. It was DeFi in 2020. It was like Mt. Gox in 2013 with like China investment. But like the point is there's always some innovation that people get excited about, that people start making a lot of money in. That gets retail attention to some degree. And then all of the people that understand blockchain dynamics, they know that the halving is coming. So they get even more excited, creates this positive feedback loop. And then the halving actually does happen. Obviously, that has like a certain level of latency for its effect on price because it takes a while. It's a big asset. But give it a couple months and it starts to dry up liquidity on exchanges. And that just dynamically increases price. And so like people always wonder how people are making so much money in these markets. It's just basic understanding of the tokenomics behind a lot of this stuff. And I think that's like an important thing to mention just because like that seems to be something that a lot of people don't know about, which is crazy to me because it's really the core behind how these market cycles work.
Yeah. No, and I think a lot of those people don't know about it because they don't take the time to even know what a Bitcoin is or know what cryptocurrency is.
Right, sure.
But no, that's great. I appreciate you going into all that. Definitely, the people that are still watching and are watching have gained a vast amount of knowledge.
But anyway, I wanted to ask you a question because like as you know, like I'm always trying to take profit out of crypto to diversify because these bubbles always pop eventually. And so I'm trying to take profit out right now and basically use that money to do like a small scale leverage buyout of a digital company. And it seems like the best type of digital company in today's like market that I could do that with is probably Amazon FBA. Maybe like just something in software as a service, maybe something in like lead generation, but probably Amazon FBA in terms of like consistent cash flow, stuff like that. And obviously that's what you've been doing for a long time. That's like sort of what's gotten you to where you're going. So I was just wondering. Yeah,
I've been doing it for June 20th would have been 2 years, so a little over 2 years now. I'll tell you my quick model of what I do, and I'll give you a little bit of advice as to what I would say companies to look for. But as far as my general FBA Amazon business, it's grown solely on reselling brands on Amazon that already are very large. People know about them. Niche categories. For example, one of my largest ones that I started with was vacuum cleaner attachments. I started getting into RV roofing accessories. I started getting into marine products. I sold a shit ton of. They work on boats and they work on RVs, and they're 12 and 6 circuit fuse boards that you plug in your electronics to. Stuff that a lot of people don't even think about unless you need one.
Right.
But there's so many people out there that actually need them. They have boats, they got RVs. So I've really targeted certain niche things that I've sold a lot of products that are disposable. And I think that market, the disposable market, whether you need to buy something every 6 months, 12 months, year and a half, obviously you want something if you're going to sell it. People probably you want them to rebuy from you within 6 months. So a lot of the products that I have are quality products, but you're probably going to have to buy within the next year or 2 years or 3 years. Stuff breaks, stuff, right. shorts out. So my whole business model has been joining distributorships and contacting companies direct. Where I see Amazon FBA, Amazon business going in the future, you've heard the horror stories, I'm sure, of Amazon, someone releasing a product and Amazon copying it. And so when Amazon, just to backtrack a little bit, my thoughts are all over the place here. There's a lot of information. I get asked almost every day by someone I know, or random people see me online and they want to know what I do and help them create a business or whatever. When Amazon got out of the book market, they approached almost every company that you could ever imagine, from Levi jeans to baseball hats, anything that you can think of, any product. They approached those companies and said, I want to sell your products on Amazon. And a lot of those companies took contracts with Amazon, and Amazon practically in a couple years, was selling everything. And, Jeff Bezos knew that was going to happen. That's why he took on so much debt and started building fulfillment centers everywhere. And for the first, I think, 5 to 8 years, Amazon was negative. And whoever gave him all that money knew that he knew what, the capabilities there were with it. But with that being said, right now we're in a day and age where reselling products on Amazon is extremely difficult because you have Amazon as your number one competitor. Most 9 out of 10 times they're going to get a better price from you. They're buying direct. So my structure has been, I'll compete with Amazon when I know, and there's ways to find out if Amazon's buying direct from that company or if they're buying from a distributor as well. Now, there's a lot of companies that have released their contracts with Amazon because, Amazon kind of fucks the company if the company is not, if they don't have a well-written contract and that company does not realize the things that Amazon does. And I'll give you a prime example of that here in a minute. But for you, if you're going to buy a business, I would say an Amazon FBA business, I would want to buy a company that has their own product, or basically I would advise you to buy a company that has their own private label products. And that may be, I think you sent me one of a couple months ago of a company that was, they had a private label, decals on a wall that you may see in an elementary school or a kid's room or something like that, which is incredibly niche. I looked at the numbers and, there was alternatives, but, they were actually getting so much, what's the word? Sorry, I'm going brain dead.
Not too many SKUs, a ton of reviews.
Yeah, not too many SKUs, a ton of reviews, but they were getting, they weren't doing a lot of advertising. They were just getting clicks, organic traffic, revenue. Yeah. And that's key as well. But the reselling game is slimming down because Amazon is taking over. People are getting pushed out. A lot of these companies, the reselling companies, sold to everyone when Amazon became a thing. And there was, effective, essentially huge price competitions.
Yeah.
Companies were creating products. They wanted to sell, to 100 people. So 100 people said, hey, I want to sell your products on Amazon. Okay, we got 100 buyers. Holy shit, first quarter we just sold 300,000 units. We're now a $50 million company. This is doing great. But then, online, the back end of that is they now have 100 people that they introduced to this new market, and they're driving down their prices. Well, they're selling these products to these people for $10. These people are going online, selling them for, this company thinks they have a $40 product. They're selling them to them for $10. Well, there's about a 30 after fees, let's say $20 window of how much people, can compete. Well, 6 months down the road, that product is now a $14 product.
Right.
And that company is like, fuck, we gotta cut people out.
Yeah.
We know our product's worth $40.
Just constantly eating into their margins. Constantly
competing, going into their margins. So the reselling game is getting slimmer. So if you are gonna buy a reselling company, which can be great as well, make sure that they have specific contracts lined up with their distributors or someone that they're buying, a company that they're buying from directly. That's really my words of advice for FBA. I was giving you an example. I bought this lens last night at 10:30 last night, and it shows up at my door at 7. So 7 a.m. this morning. Amazon is the way. So if you can find a company that suits you, that has those things, it's no question. The only thing that you're going to be left with, and the only variable would be if it's a private label product. Can I make this product better? Can I have 5 different colors? Customer interaction is probably number one when you buy a company like that, but ways to better my product, improve it, so basically you don't buy a company in 8 months to 12 months, that trend's gone.
Yeah.
and you're stuck with this company and every month it's declining.
Right.
So there will be definitely some work involved, but you can't really go wrong with starting an FBA business or an Amazon business in general. If you, just like anything, you put in the time, you understand the market, understand what people want.
Yeah.
I've told people that ask me stuff. It's like, or why did I come up with this product, or why I want to do this product? It's like, there's 150 to 200 million people on Amazon US.
Mm-hmm.
And it's like, if I find value in this one product, there's got to be at least 50,000 more me's in the United States. So think about it. You create a private label product and you can sell to 50,000 people.
Right.
Say that product's $50, $100. It's like you just did a significant amount of revenue. And I'm going off topic now, but
No, that's good. Yeah.
There's a lot of possibilities with it. So I would definitely, and still send me some more. I know you sent me that one company, and I actually liked it. I gave you a couple questions to think about as far as, I think the spreadsheet you sent, they weren't accounting for their 3PL or their third party logistic cost with their shipping and handling, and storage.
Right.
But
sure.
I like that company. So
yeah, I've got a lot like sort of on the radar. It just kind of seems to me like that's the next step logically. Usually I would just buy more investment real estate, but obviously the real estate market, especially in Florida, is massively overvalued right now. People are paying premiums at ridiculous rates.
You can't really even sell your house.
Yeah, well, like my entire strategy with investment real estate has always been just equity wedge, like real estate investing. So like finding real estate that's essentially under market value, which has been easy historically in Florida because like basically like Florida is a very old centered like community for the most part, and so like a lot of the residential properties that you'll see in like general neighborhoods, like the way real estate valuations work are just typically like CMA, like you just have this like sort of like market analysis for a given like area.
Yeah.
And
what'd your neighbor sell the house for 6 months ago for?
You're talking about like for my investment property?
No, I mean like that's kind of how.
Oh yeah.
That's kind of how that
that's
stuff
exactly
goes.
how it works,
It's
right? Like even if like you get an appraiser to come in, that's all they do basically. They look at the zip code, they look at like the square footage, and they just like
schools are.
What are the other ones selling for? It's very free market standard, and so what you can do is you can go into historically what you could do before like real estate really went parabolic over the last year because of incredibly low interest rates, is you can just go into a neighborhood and you can see stuff for sale that's massively outdated cosmetically, and the rest of the neighborhood might be modernized, and it's like an old family's lived there for like a long time. They haven't modernized anything. It hasn't really been updated since the 80s, but like the HVAC system is still structurally fine, and like all of the very expensive updates are fine, but the stuff that's very cheap like to fix is not fine. It's very outdated. And so like that, like we were talking about earlier, like my entire investment thesis, the only way really to make money in financial markets is to exploit inefficiencies in pricing. Real estate was, in my opinion, like up until very recently, and hopefully it will get back to this, but the trend is going away. There was a decent amount of inefficiency to exploit in pricing with real estate because 90% or so of the market demand is coming from, like residential buyers, not investors. And so they're going in and they're pricing the property on like, do I want to live in it or do I not want to live in it? And basically, if that's the case, if they walk into something that's cosmetically out of date or it looks bad or like a hoarder lived there or whatever and it smells bad, whatever it might be, like they massively overestimate like the market value of that like inadequacy, right, for their purposes, because they don't want to have to deal with all that shit. And so because the mass majority of that market historically has not been dictated by investors, the pricing has not been extremely efficient. And so you can go in, you can get these wedge opportunities with real estate, especially in Florida, by just, you throw like 10 to 20 grand into updating it cosmetically for relatively cheap materials. And like automatically you can pretty much know what your equity wedge is going to be, because it's going to be up to date with any other modernized square footage equivalent property in that area. And so, for the past few years, that's been all over in Florida. You can find that, like, you can find multiple properties like that every day just in your zip code. Recently, it hasn't been like that because everybody is flocking to residential real estate because of the incredibly low interest rates. And so that's kind of why, instead of doing what I would have done before, which is just consistently buy equity wedge opportunities in real estate, I'm looking to basically do like small scale leverage buyouts of companies that have positive cash flow, that have been around for 5 years, that have gotten over the obstacle of the startup, difficulty. And
yeah, that's the thing with, you definitely want to have a well-established company, whether it's for a year or whatever.
Yeah.
It's just like the upfront cost, and that's what I tell a lot of people. Like anybody that ever asks me, should I start an Amazon business? My answer is always yes. And my second sentence is, be ready to throw some upfront money, because the results are not going to be. A lot of people do things for like a month or let's call it 60 days. And if they don't see the results they don't like, or they were hoping for, they're out.
Yeah, well,
And
I think
like,
it's because people go into stuff without even a thesis for their investment. Right?
Yeah, and it's like, if you were to go another 30, where could your business be?
Right. It's
like that day that you quit, you don't know if tomorrow someone sees it, someone likes it, and it just blows up. But so I always tell people, it's like, yes, you should do it. Come up with a product, create a product so you have full control. That's the big thing about the reselling game. I virtually have no control. Right now, when we were talking about supply chain with blockchain technology, hopefully blockchain somehow figures out how to get us out of the complete bottleneck we're in with the supply chain, because I've had purchase orders open for several months, a lot of money that's not out, but a lot of product that is going to cost a good bit of money, that these orders should be fulfilled. And it's been months because so many things are backed up. The COVID affected literally everything. The supply chain's all fucked up. But create something that you have full control of. You control the pricing.
Yeah.
Buy something that you just have control of. But I will tell you in a short story here. So those 12 and 6 circuit fuses. There's a company called Blue Sea Systems. I may have told you this before, but I was selling, I don't know, $60,000 to $100,000 worth of just these 2 fuses a month. And I put in a massive purchase order one month, and I didn't get it. Basically, it was really weird because every time I ordered from this company, I got it like the same week, like shipped out, boom, I got it. And I hadn't gotten it for 2 weeks, so I started calling my distributor. I'm like, hey, what's going on? So he's like, okay, I'm going to call XYZ from Blue Sea, see what's going on. So I get a direct call from a person at Blue Sea Systems, and he's asking me all these questions about what I'm doing, how I'm beating Amazon, because I was competing with Amazon. Well, the price sheet I had Blue Sea Systems retail and Blue Sea Systems bulk. The difference between is, if I buy this fuse in a retail version, it comes in a package, nice pretty package that you'd hang up on a wall in a retail store. Well, the bulk comes in 10. There's no retail packaging. And that's what people would buy if they have like a marina or a service center. They take them out of the thing, they slap them in your boat, whatever. So I figured, why would I buy one if I can buy 10 and saves $5 a fuse?
Yeah.
Or actually, it was I think it was honestly like $8 a fuse I was saving by buying 10 in this non-retail packaging. So I had like a crazy window of making money. And I think at like one point, like selling those fuses, I was making like, just between 2 products, I was making like $12,000 a month just in 2 products. So this guy calls me and he's like asking me everything I'm doing. So I tell him, I'm like, I'm new to my business. I'd been in my business 6 months. I'm like, why? Like, being honest with you, like, when does it ever hurt to be honest? So then, he follows up, calls me, okay, I'll call you back. So he calls me back and he's like, hey man, I should have never let these purchases go through. These are only for specific, buyers. You can't be buying these and selling these online.
Right.
Our Amazon guy that has a contract with Amazon has been freaking out because you have been destroying Amazon. Amazon has to buy monthly from us and they're not selling any product. I was like, damn, that sounds like you guys fucked up. Like, why is this my fault?
Right.
And so at the end of the conversation, he says, hey, Kyle, do you owe Amazon any money for selling our fuses? I'm like, no, what do you mean? He goes, well, we just got a $350,000 bill from Blue Sea Systems for the quarter saying that we owe them a bunch of money. do you know anything that would be about? And I was like, you guys have a contract with them, right? He goes, yeah. And I said, do they pay upon product arrival, or do they pay net 30, net 60? He goes, no, we have terms. I said, okay. I said, Mike, if I were to sell you, I said, I'm Amazon. I said, you're Amazon, Mike, and I'm Blue Sea Systems. If you come to me and you want to buy 5,000 5,000 products from me at Blue Sea, and you've got terms with me. Once I receive the product and you sell it online as Amazon, if a customer returns it to you and says that product's defective, why would you come back to me when those terms are due and buy a defective fuse?
Mm-hmm.
You know what I'm saying?
Yeah.
They haven't paid for the product yet, but why would they pay for something that a customer said didn't work?
Right.
After 60 days. He goes, oh shit. I'm like, hey, Mike, are you getting back all those defective returns? He said, no. Well, Amazon told us that it would be a disposal fee if they want us, to get back all of that product. I said, so you just said no, throw it away? He goes, yeah, we don't take it back. And I said, Mike, every single product Blue Sea Systems sells, I can go online right now and it says used, buy from Amazon warehouses.
Yeah.
I said, they just hit you with a credit for $350,000.
Yeah.
You told them that you didn't want it back to inspect it, and then now they're just selling your fucking fuses online.
Yeah.
I was like, so like when I first said Amazon does this to people on contracts, like if these companies aren't on top of their shit and able to understand how Amazon works,
yeah,
they can truly get fucked. And a lot of these companies are. So I don't know. That's my story, but it's just
that makes sense. Yeah,
it was pretty crazy to me, and I was just like, at the end of the conversation, I was like, Mike, so you're telling me you're gonna cut me off when in like a short amount of time I've bought like a couple $100,000 worth of stuff from you,
right?
And they're doing that, and you want to cut me off. So that was the last conversation, and I've never bought fuses again from them.
Yeah, I mean, like, I think that kind of overlaps with that whole idea, right, of just how in these, like, quasi-meritocratic, like, markets, it's, like, it really just comes down to how well you know the ins and outs of, like, the industry that you're in. And, like, knowledge is key. It's, like, that's really it. It's, like, the more you know, the better you'll be able to exploit the way that these processes fundamentally work. And the people that are always getting screwed are the people that just don't know what they're doing. And the biggest opportunity cost of making money in a lot of these innovative markets, whether it's blockchain, whether it's Amazon, is just how much time you're willing to put into learning the ins and outs of everything. And I think like a lot of people, for whatever reason, they'll rush into stuff that they don't understand, and those are the people that really get screwed in this stuff. So yep. I totally get it.
And like when I started my business, I was having a conversation with a lady in the airport a couple of months ago, and she wants to create a business, and she was asking me about how I did it and whatever, and she asked me how much time I put in when I first created my business, and I was like about 80 hours a week. She's like, oh my god.
Yeah.
I'm like, well, like the first year is like that much, like 60 80 hours easy, because like, and then like now I'm to the point, it's like, okay, yeah, I'm on Amazon on my phone, I'm checking, I'm looking at orders, I'm communicating with customers at home.
Yeah.
I'm really never off the clock.
Right.
But me shipping or finding other products, it's pretty much when I'm in my office, 10 hours a day, because you reach the point, obviously in your line of work as well. There's a point in time where you don't have to continually put in all those crazy amount of hours,
right? Because
it is so draining, and it actually can work against you.
Yeah.
So you find like that happy medium once your business or once your trait has reached a certain
right.
point.
Yeah, I mean, like that's the problem, right? Like that's the only way is like put in like that much time. Like I mean, I'm working like 12, 13-hour days like every day basically, and like even like there's like that's the thing. Like especially when you're like working for yourself in some capacity, there's just like no off time at all. And like ideally like there's this like initial kind of like hump to like getting like incentivized, I guess, to continuously do that. But once you start like making money and growing it, it's like it's very easy to like work those kind of hours, I think, without any kind of hesitation. And so it really is.
You've already seen the results.
Yeah, and like you also it well enough to where you know where your next steps are. And I think like it's almost like I the more that like I've grown sort of like what I do in blockchain stuff, like the more I work, and like it's just like it's always kind of followed that path, because now it's like, well, now it's like the snowball effect that's like rolling down this hill, and you know, if you play your cards right and you 10x from here, it's like now you're at a ridiculous like net worth, right? And then like you can just kind of keep
you're
growing.
Good to go.
It's like working out, right, or something. It's like it sucks at first, and then like once you start to see results, it's like it's much easier to be incentivized to do it. But yeah, I mean, that's definitely the only way, right? Like you have to put in ridiculous hours to do anything significant.
And it's honestly fun.
But anyway, wanted to ask, obviously you've grown this Amazon FBA company pretty significantly over the last couple of years. What do you think like your next 5 to 10 years look like? What are your plans, your goals on a big scale?
Yeah, so for the next 3 years, I want to create a product and a brand, and I want to expand it. I want to be consistently doing $5 to $10 million a year in revenue within the next 2 years.
What are your margins on something like that? Just out of curiosity, are they
on a private label product? When with you have complete control, steady 20 to 30% all day.
Okay.
Reselling it gets difficult sometimes.
Yeah.
But yeah, for the next 3 to 5 years, I want to create a brand. I want to, take it to the next level with that. I really want to get out of the reselling game. There's too many variables that my business is relying on. People having product, price changes, XYZ. So I got to constantly be hunting for new stuff. And it's like I'm spending all this time and energy selling something that some other dimwit across the world created. Which it's a great product, but if I spent that same amount of time that I'm spending on reselling someone else's product, it's like I think I could have a damn good product or brand myself.
Mm-hmm.
So that's definitely one of my goals for the next 3 to 5 years. And then after that, I guess with that goal, it's to be fully automated so that I don't have a warehouse.
Mm-hmm.
I'm not shipping. I'm tired of packing boxes. I like it. I was telling Jordan the other day, some days I need to do it. Some days I need to be in here, clear head, play some music, and pack boxes and ship. But it's good. But as far as the day to day and the sweat grind, after a few years, it kind of gets a little old sometimes. So fully automated, creating my own brand, and then as soon as that's fully automated and I've got a brand, I want to just focus on real estate and building real estate investments, land, and then properties. And you know about it, but I'm really big into photography, mm-hmm. and I love photography. I love capturing a beautiful moment, a beautiful scene. Just a little bit of background and why I love photography. It's I've always struggled since I was a kid on being in the present. I'm always thinking about the next thing. And photography, it forces me to see the beauty in things. And that if I can present beauty to someone else without them being there, maybe I want them to go, maybe seeing my photo, they want to go there, mm-hmm. or they've been there, and it sparks a memory for them. So when I take these pictures, I edit them, and I'm happy with them, and I produce them. It does the same thing for me. It's a memory, and it allows me for that time period to appreciate what I'm doing. So I do a couple contracts of that a year. I want to expand on photography. I used to shoot every day when I lived in Knoxville, just about every day, and I barely ever shoot at all anymore. So I want to travel and do photography as well. Not really a money thing. If I can sell photos, cool.
Got to start launching some NFT photography.
I know, man. I know. The Italy collection, I think, would be cool to do. I need to do that. But yeah, that's really my next 3 to 5 year game plan, man.
Nice. Yeah, that's cool.
What about you?
Basically, like, I was supposed to go to grad school this year. I was supposed to try to start applying last semester. My plan had been for a number of years to basically try to get into Oxford or Cambridge or London School of Economics and do some sort of dynamic master's program. In the UK, because they have much more, they're much less specialized in their postgraduate studies. You can do dynamic masters in multiple fields at the same time, and that's a lot better for my interests. But I pushed it back by a year because what I was doing for work was it was like too profitable to justify the opportunity cost of doing a full-time master's program, especially over this year, which I saw as probably one of the most important years for crypto, at least over the next 5 years or so. So I pushed back grad school for a year because I couldn't justify the opportunity cost of not doing what I was doing to make money. It was too profitable, basically, especially in this year when I think crypto is going through another hype cycle. And so my plan right now is to go to grad school next August. We'll see how like markets go and how what I'm doing goes. Hopefully I don't have to push back anymore. But in the meantime, basically trying to do what we've already talked about, continue to grow this portfolio. I think realistically, like if Bitcoin or Ethereum break new all-time highs, it'll be pretty definitive that we're going into a second round of hype cycle, which is basically what happened in 2013 with like an entire double bubble market cycle. And if that's the case, then reasonably there's another 2 to 8x or so out of this cycle reasonably. If I could do that, then I'll try to diversify all those assets consistently. In my free time, I'm trying to basically work through like an entire STEM education because that's something that I wish I had the chance to study in undergrad, but I was already doing 2 majors. I just couldn't do that as well. So I'm trying to work through just different science stuff, higher level math, like get a deeper understanding of that, like biochemistry, physics, blockchain, computer science, just to sort of level out my understanding of all of those fields. And then I would try to go do a master's in economics and philosophy in the UK for a year or 2 years if I'm doing it part-time, come back, continue to work, try to expand like portfolio, try to work in some sort of finance firm for a couple of years, leverage that into like an MBA, hopefully at a high-level school, and then hopefully be able to leverage all of that credibility into doing a capital raise for private equity. I've sort of been mapping out a 10-year plan or so with a couple people that are good at stuff that I'm not good at since I was 18 or so. And we've had this plan intact, and we've kind of lived by it since then, and it's worked out so far. So hopefully we can keep on track, and ideally before we're 30, the sort of goal is to do, like 100 million or so capital raise for our own private equity fund that's focused on disruptive tech, and be able to hopefully have some influence over those fields.
That's awesome, man.
In like a real way.
I'm super excited to watch you grow in all of those aspects. I'm just worried that you're going to become so smart that you won't be able to talk to people under like 100 IQ.
I don't think that's going to
Just kidding. No, but that's super cool, man. I'm definitely excited to watch you do that and watch you do all those things. And to wrap this up, man, I honestly think we had a great episode. I think the first podcast was a success. What do you think?
Yeah, it was fun.
Did you have a good time?
Yeah,
Good.
No, it's a good time.
Well, thanks for coming here. I got one last question.
Mm-hmm.
And it ties into my name. As you know, as they know, the podcast name is Bite the Bullet Podcast. And I believe that in one's life, they're always, at some point in their life, they're going to be faced with an opportunity that they're going to either shy away from, or they're going to, take one step forward. They're going to bite the bullet and move on.
Mm-hmm.
And usually that leads to great things. What would one bite the bullet moment in your life be?
I mean, I don't know. It's kind of hard. Probably 2 things, I guess. One would be try to compress this as much as possible, but basically my dad was obviously like very successful in general in his life or whatever, and he died when I was young, and so I found out, not until I was like 20 or so, that I'd basically inherited a substantial amount of money, and I'd been told more or less that like that wasn't the case for my whole life. And so that was a pretty sort of shocking revelation, and I had been obsessed with like reading formal philosophy in like all my free time since I was basically 11. And philosophy, if it does anything, it like makes you more self-aware and more hopefully subject to, you know, not being overwhelmingly self-obsessed, I guess, hopefully. And so that was a really big sort of problem for me, caused a lot of like anxiety, a lot of like mental guilt.
What was the guilt stemming from? Like, why did you not like that? Because most people, if they learned they were going to inherit a lot of money, they'd probably would be, you know, happy about it, ecstatic about it. What was different for you?
Yeah, I mean, so my dad like was born as an orphan. He was basically an orphan early on. He had no money. He was born in some of the worst projects in New Orleans, like the Ninth Ward. And, you know, he had a ridiculous story. Like, he dropped out of high school in the 10th grade. He had no formal education. He built this sort of empire on his own.
And what was that?
He started Popeyes, like, in New Orleans when he was, like, in his early 30s, I guess, at this point. And, you know, he grew that on his own into this, you know, hundreds and hundreds of $1 million empire out of, like, sheer poverty. And I don't know, maybe some of it was instilled by him, basically, just like the value of work and the idea that, like, you know, if you're just handed everything, you're not worth shit, basically. And that maybe stuck with me. But I think a lot of it came from just studying philosophy as well. I mean, we were talking earlier about how, like, all of the meaning that I've tried to, like, compose in my life has been self-identified. And so it's very difficult to try to find meaning in life, I think, when you don't have any downside, basically. You have no consequences. You have no reason to progress. And so it was difficult for me to, like, justify what to do with that. I basically probably found out when I was, like, late 19 that I was going to inherit this absurd amount of money, in theory. And I'd already been working for a few years on trying to build out my own, like, worth, basically, trying to make as much money as I could as early as I could. And so it just kind of threw a wrench in that whole process, because it's very difficult to justify the opportunity cost of working when to make money when you know that it doesn't even touch, like, the amount of money that in theory you already have at that point. And so that took like a year for me to get over, basically, try to figure out how to handle that, what to do with that. It was like a pretty shocking piece of information for me. And then I eventually decided that I was just not going to take it, basically. And that was, like, fantastic for my mental health, for sure. And so I haven't touched any of the principal money that I technically inherited. I'm not planning on touching any of it. Like, my plan basically is to defer it until I'm like 30. I have more life experience, and then to transition all of it into like a nonprofit that I start, and not be able to like access it and to use it for philanthropy, for probably disruptive tech things that I think are necessary to try to make some sort of change, try to influence things in some positive way. But you know, it basically for a long time just took away my ambition, I guess, and that was like very difficult to overcome. And when you have no ambition to progress, it's very difficult, I think, to find meaning. And so that was pretty tough, which sounds like insane to say.
No, I think
like,
it's very admirable.
Now that I'm saying it out loud, it sounds ridiculous to say.
I think it's pretty admirable.
Tough to inherit a lot of money.
I mean, but for your background, not everybody studies what you have from an early age. So
fair enough. But anyway, so I basically decided not to take any of that, to focus on what I was already doing, and to just try to grow that as much as possible, to not even think about anything else. And I'd gotten that advice from some of my like best friends childhood wise, and I think that was really good advice. And it took me like a year to kind of finalize that decision, because it was a big decision. But yeah, I'm really happy I did it like 2-3 years down the road. It's been the only thing that's like let me like grow. So that's been great. That was a big thing. And then I guess like another like more personal thing would be like, you know, even with my like personal net worth that I've been trying to grow since I was 16 or so, I've had a number of times where, you know, the whole thing is essentially collapsed to a pretty high degree. And I've had to kind of rebuild twice, more or less. And like, I think when you're dealing with volatile markets, that's obviously going to happen all the time. You know, you get confident or you get cocky and you make mistakes. And that's happened to me a couple times. And yeah, luckily I've been able to like dig myself out of those holes and grow. But yeah, I guess that would kind of be my answer. I don't know.
Hey, that's a great bite the bullet first ever answered question. I appreciate your time, sir.
Hey, thanks for having me.
That is seriously an admirable. That's a great story, man. So thanks for sharing that with me and with the audience. Can't wait to get this episode out. Got some editing to do. It's gonna be great. So
hey, thanks
I'm gonna have you come back on. We're gonna talk about your experiences in Peru.
Mm-hmm. Yep.
We might talk about God.
Let's
talk
do
about
it.
some God. Some God.
Let's get into some deep philosophy.
We're going to get into some deep philosophy. So thanks so much again, man. I've really enjoyed the time.
Yeah, it's been fun, for sure.
Bite the bullet, baby.
All right.
Say it. You got to say it.
Bite the bullet.
There we go.
Got a pocket full of blue boys, a mirror jean and some new Jordans. Got a duffel bag full of blue boys. Just left the car lot, got a new toy. I got a backpack full of blue boys. On the way to Eliante in New York. Man, I got a trunk full of blue boys. Ran through the bay, bumping too short. Yeah, I got a pocket full of blue boys.